Good evening, ladies and gentlemen. Welcome to a very special evening. An evening that celebrates excellence in the Indian equity broking industry. It's now time for me to call upon our first guest of the evening to give the welcome address and kickstart the event. Ladies and gentlemen, please welcome President and CEO India, Dun & Bradstreet, Mr. Kaushal Sampath.
Friends from the media, ladies and gentlemen, good evening. I feel honored to welcome all of you this evening to the third edition of Dun & Bradstreet Equity Broking Awards 2011 in partnership with BSE Investors Protection Fund. Intended to acknowledge and celebrate the most distinguished players in the broking industry and their stellar performance in a tough environment, DNB's Equity Broking Awards are an endeavor to felicitate the stalwarts of the Indian equity broking industry, which is one of the key pillars of the Indian financial services industry. I would also like to take this opportunity to announce the launch of the 5th edition of our publication, India's Leading Equity Broking Houses 2011, which captures the pulse of the equity broking industry. And I'm extremely delighted at the overwhelming response that this publication has received since its inception in 2006, both in India and overseas, because as all of you know, the publication is available free of cost to anyone, anywhere in the world on our website and through DNB offices in over 200 countries. I would like to talk a little bit about our publication, India's Leading Equity Broking Houses 2011. This publication profiles a total of 125 equity broking companies and also features a study based on the financial analysis of 32 equity broking firms whose audited financials for the year March 31st, 2011 were available to us. We have divided these broking companies based on their broking income into large size. So if you have a broking income of 2,000 million rupees or more, that's large size. Mid size, so between 440 million to 2,000 million rupees, that's mid size. And small size companies, which is less than 440 million rupees of broking income. That's how we've divided it. I would like to thank all the firms that participated in the survey and shared information with DNB. We will appreciate that without your participation, we cannot come up with the analysis, we cannot provide the insights that we seek to. So I thank you all for participating in the survey and the study. And I would like to congratulate all the firms for their active and enthusiastic involvement and for all the firms that have won the awards, without which this evening would not have been possible. Thank you once again for joining us tonight, and I hope you will enjoy the proceedings. Thank you.
Thank you, Mr. Sampath. Now it's time for me to introduce our guest of honor this evening, Dr. Ashok Desai, Consultant Editor of Business World magazine.
Well, thank you very much for that very generous introduction. There is a job to be done, and it is twofold. First of all, we have to grow the number of investors. The proportion of our population that invests in the stock market is miserable. It is probably not more than 2 or 3%. If you look at its regional spread, you'll find that virtually all of it is in Western India. Really, Bombay, Maharashtra, Gujarat, that's about it. I live in Delhi. Delhi is today far richer than Bombay, but no one ever invests in shares in Delhi. Here's an enormous market which is not being exploited. And therefore, it seems to me that you have a job to do. You have a marketing job to do. You have to educate people to invest. You perhaps know that India has one of the highest savings ratios in the world. India saves roughly 2/5 of its GDP. India is second only to China. And yet, very little of it goes into shares. A lot of it, a very high proportion of it goes into property, which is why property prices keep rising and rising and rising. Of the part, let's say roughly 40%, that is, let's say 16 to 18% of GDP, which goes into financial investments, roughly 3/4 goes into fixed interest investments, and the rest goes into equity. So there's an enormous potential market for you, which you can exploit, and you have to find a way of exploiting it. And the way to get people interested in investment is to create discussion about it. It's not enough to have thousands and thousands of terminals. Around every terminal, there should be an investors club. You should be starting investors clubs, and they should be discussing shares, just as people in Ahmedabad, for example, discuss shares when they go out for a walk in the morning. This is your next job, and this is what I would like you to take up next. Thank you.
I now invite Mr. Kaushal Sampath and the other dignitaries on stage to launch BSE IPF Dun & Bradstreet, India's leading equity broking houses 2011. Ladies and gentlemen, kindly put your hands together as the book is now officially released. A book that's unrivaled and unparalleled in the industry.
Hi, this is Sonakshi Sinha and I'm coming to Zoom today, so keep watching.
Zoom Superstar Weekend, Sonakshi Sinha, today only on Zoom.
Silk ka sparsh, har deewar par.
Is the market's unpredictability making you nervous about your investments this Diwali?
Get cues on top performing stocks and sectors from experts who track every move of the market.
And smart trading ideas that ensure your picks outplay the markets.
Gift yourself a prosperous portfolio this Diwali.
Catch your trades Diwali special.
Only on ET Now.
The world's most exciting sport is ready to burn rubber in India. Grab the cockpit seat to know the personalities driving F1 and shift gears into overdrive with the business of Formula One in India. The buzz, the scoop, the news and the big deals, it's all here. On Checkered Flag, powered by Brand Equity, an F1 special co-hosted by Karun Chandok, only on ET Now.
I now invite a very competent arbitrator and moderator from our media partner ET Now, Damini Kumari, to take over proceedings and lead the panel discussion. Over to you, Damini.
The panel discussion is really going to be on making Indian capital markets more accessible. And when I actually looked at that topic of discussion, what came out really was making it accessible for whom? Is it for the investor or is it for the issuer? And actually, strangely enough, it needs to be made accessible for both. Yes, stories are there to be told, and I think solutions have to be found out of the box. Really, that's what we need to look at today, and we'll try and attempt to do that with our panel. Let me go ahead and introduce them to you from left to right. We'll start with Mr. Sudeep Bandyopadhyay, who's Managing Director and CEO at Testimony Securities. We have Mr. Kamal Bansal, who's Head of Institution at Bonanza. We have Mr. Chandramouli Balaraman, who's Founder, CEO, Indigo Software, and which is now with Polaris Software. We have Mr. Jagannathan Thununguntla, Head of Research at S&P Global Securities. We have, of course, Sharmila Joshi, Head of Equities at Fairwealth. And finally, Mr. Balasubramaniam, who's Head of Special Initiatives at BSE. So let's start from the left, Sudeep, your views on this.
generally lack of interest in equities. Of course, for a minute, if we leave aside the current gloom and doom scenario, which is world over prevailing, and I'm not sure whether a retail investor should enter into the market today, but if you leave that aside for a minute, something needs to be done to take the equity markets to the masses. Whether it happens directly through equities or through the mutual fund route, I'm not sure, but somewhere it needs to be done, and I think till the time that's done, I think even the retail investors are not getting what they should be getting. If you look at, forget, as I again say that today's doom and doom, but when there is a rally also, you see people make money. And who make money? The FIIs make money, the HNIs make money, the guys who are invested in the market make money. So retail investors are never invested in the market, so they will never make money. So I think it's a catch-22 situation. You have to bring them to the market. Right. And if they're invested in the market with good advice, somewhere they may start making money.
Come on.
See, I think everybody in the room and in our hall is convinced that there's a scope in Indian market. Economy is doing well. It is going to do well. There's no doubt about it. Whether it may take 1 year or 2 years to recover. But we also need to look at that maybe we are too much focused on the equity market. We need to look at the potential of the Indian market. We understand that only 8% of the saving is going to the equity market. But apart from that, there more than around 50% of the saving is being invested in the physical assets. The rest is say in bank deposit. More than 30% in the bank deposit. So we need to find out ways how to bring that fixed deposit saving into the capital market. Either it can be through the bond market, it can be through some kind of innovative instruments like ETFs, maybe index ETFs. We need to promote those products. Because right now, if we are say promoting only speculative trading, which may be good for the say industry revenue, which even we are not making now, but for a long-term health of the industry and long-term potential and the wealth generation for the investor, we need to look at the product and promote the equity culture. So equity culture is going to stay, but we need to find out more products, different products, maybe like gold ETF. Gold is a fancy with the investors. Indian people have a lot of investment in the gold. So can we promote gold ETFs, which will drive the money to the capital market? They will get aware of the capital market. There may be real estate investment schemes, because so many people are investing in real estate. But there can be some route whereby they can be brought into the capital market with the similar products. So I think there is a need to bring out with the new products, whereby investors maybe not be investing only in the equity market, but also in similar products which are being brought in by the capital market players. We as a broker have to evolve ourselves more as a financial planner and the financial manager for the investors.
What do you want to see now, Chandra? Change for small issuers.
Sure. I don't understand why, if I can do a secondary market transaction completely paperless, why should I sign up all these forms and papers for subscribing to an IPO? Right. And I think that process needs to be simplified, made accessible. Because today, there are, from what I understand from the industry, there are about 200 centers of collection of all these IPO forms. And if you are not in the vicinity of this 200 odd locations, you are out of the market. You have no access to the IPO market today. I think that system needs to be addressed. The third thing is, I think we need the flows of money into this broking and the mutual fund distribution business is the brokerage and commissions. And I think we need to ensure that there are decent amount of brokerages for these transactions that can feed this industry. Otherwise, it's just going to, die a natural death, or it is going to correct itself. I don't know how, but we seems to be in a hyper-competitive situations where there are not sufficient revenue flows into these companies to be able to offer a decent level of investor service. Right. And I think, you need to have income to be able to offer a service that is worthy of your money.
Jagannathan, this one's for you, Head of Research at SMC Global. Tough job, because you've got to get those the revenue coming in, the profit line to be showing, and then you have people coming in telling you need to educate investors. Do you really care about educating investors if it doesn't add to your bottom line?
I mean, if they are really fully educated, then they will never invest. So probably it is better they don't get educated fully. Whenever we talk about like this growth story and things happening, I mean, we come back to the same point again, the investor awareness, and we don't move. We don't take a step forward. We try to rotate in the same things again and again. So that is one. And one more thing, the main problem is the lack of demat accounts. 1.8 crore demat accounts in a country with 120 crore population. That is